You're sitting at your desk, scrolling through news about people making fortunes in the stock market, and then you wonder, why not me? Here's a truth bomb. Your money is losing value every day if it's just sitting in your bank account. Yes, you heard that right. Inflation eats away at your savings, and the only way to get ahead? Investing. But there's this nagging fear, right? What if I lose it all? Well, today, we're going to strip away that fear and replace it with understanding and confidence. By the end of this video, you'll know exactly how the Indian stock market works and why it might just be the most powerful tool in your wealth-building arsenal. But first, let me ask you, are you ready to stop worrying about money and start making it work for you? Or maybe you're thinking, isn't this risky? What if I end up broke? Well, let's dive in, and you'll see it's not as complex or as scary as it seems. Number 1, what is the stock market? Think of the stock market as a giant marketplace, except instead of fruits and vegetables, you're buying and selling parts of companies called shares. Owning a share makes you a part owner of that company. Pretty cool, right? Now, before you get carried away imagining yourself as a part owner of Tata or Infosys, let's break this down further. A share represents a small portion of a company, and its price goes up and down based on supply and demand. Simple. But wait, what drives that demand? Fear? Greed? Yes, and also a company's performance, future potential, and market trends. This brings us to the next point. 2. Stock market indices. What are they? Ever heard of the Sensex or Nifty 50? These are stock market indices, which are like the report cards of the stock market. They track a group of top-performing companies and give us a sense of whether the overall market is moving up or down. Quick humor interrupt. Imagine the Sensex as that one kid in school who always gets 90% or above. If the Sensex is performing well, it's like saying, the economy is acing its exams. These indices help you track market health. When the Sensex or Nifty rises, it usually means a lot of companies are doing well. When it drops, well, that's a sign that there's some trouble brewing. And here's where you need to be smart. 3. How does the stock market work? So you're ready to buy some shares, but how does the actual process work? In India, we have 2 major stock exchanges, the Bombay Stock Exchange, BSE, and the National Stock Exchange, NSE. Think of these as the platforms where buying and selling happen. Here's the fun part. You don't have to be on the floor shouting bids like in the movies. Today, it's all done online, right from your smartphone or computer. You'll need a demat account, which is like a digital wallet for holding your shares, and a trading account for executing those buys and sells. And remember, the stock market isn't a get-rich-quick scheme, but it is one of the most powerful ways to grow your wealth over time. So, are you starting to see how this can change your financial future? We're just getting warmed up, because up next, we'll cover something that could make the difference between average returns and mind-blowing wealth. Now, you've learned the basics of the stock market, what shares are, what indices do, and how the market works. But here's the real kicker. The stock market doesn't just reward those who invest, it rewards those who stay invested. And that's where the magic of compounding comes into play. The earlier you start, the more time your money has to grow exponentially. Small investments today can turn into massive wealth tomorrow. So, what's your next step? Are you going to let fear hold you back or take action toward your financial freedom?